Gold has been hitting all-time highs recently, but there could be a runway for the gold price to move even higher over the next few years. There are many different factors affecting the price of gold at this time, but one of the key factors is interest rates. Generally, as interest rates move lower, that helps the price of gold, and vice versa. One of the key ways of tracking the price relationship with interest rates in gold is looking at the 2-year Treasury note in the US. They tend to follow each other quite well over the long term. So let's take a look. Let's go back to 2000 here. We can see that the 2-year Treasury note peaked. That's the blue line here in 2000. That was as a tech wreck was taking place. And oh, by the way, so this red line is the federal funds rate just as a reference point, and the gold line is gold. So we saw the peak happen in 2000 for the US Treasury note, 2 years, and it went all the way down to 2003. Gold in that time period was up by 30%. And then what we saw was the yield on the 2-year Treasury note can climb here all the way into 2006. Now, gold actually did quite well in that environment as well. That's because we were in a commodity super cycle at the time. That's after the tech wreck in 2000. All of a sudden, investors looked around and said, they weren't that interested in technology stocks anymore. And they realized that there was a shortage of commodities, and we saw commodities as a group perform extremely well. And if we take a look here, we saw the yield on the 2-year Treasury note once again peak here in 2006 and move all the way down to 2011. And gold performed extremely well in that time period. It was up by 203%. And then we saw the 2-year Treasury note struggle here a little bit and then start to climb higher and higher, and it peaked in 2018. That was actually December 2018. In that environment, gold actually performed quite poorly. And then we saw the Powell pivot, yes, the first pivot in December 2018, and the yield on 2-year Treasury note started to move lower all the way into 2021. And gold in that environment was up by 49%. And then we saw that trough here in 2001 and then increase again all the way into 2023. In that environment, gold didn't perform very well at all. But then we saw that peak happen in 2023 for the yield on the 2-year Treasury note. And we've seen it, the yield move even lower. And in this environment, we've seen gold go up by 37% so far. Now, if we see the yield on the 2-year Treasury notes, currently around 4%, if we see it move lower over the next couple of years, that could be very supportive of a higher gold price.